Good evening, everyone. Welcome to the Let's Trade Live 24th April 2017. This is Wayne, Head of Research and Education. On behalf of Fullerton Markets, I warmly welcome everyone. The webinar will be divided into three segments. The first segment will look at what has happened in the past 1 week. The second segment will look at the calendar for this week for any news trading opportunities. And finally, the last segment will look at the charts for further trading opportunities. Feel free to type in any questions that you may have. I'll take the questions along the way. Let's jump straight to it. Of course, the biggest event of last week is a surprise announcement by UK Prime Minister Theresa May. She announced that the UK is going to have an early election in June, about less than 2 months away, on the 8th of June. So as you can see over here, she has gotten the Parliament approval. A majority voted in favor of her early election proposal. So we see the sterling volatility in the early part or the first half of last week. Of course, initially there were some rumors and before the official announcement by Theresa May. So after she made the official announcement that it is confirmed of the early election, we saw how the sterling rally. So it is viewed as a good news as a whole, because at this point in time, Theresa May is gaining popularity. So it is expected that she will have a majority win in the upcoming election. So once she has a majority win, she will have a better support in the parliament for her to proceed with the Brexit negotiation with EU. So that's why we see the sterling rally upwards. Of course, the next event is just over the weekend, which is the French presidential election. And this is the result very quickly. The top 5 candidate and the outcome of the election. So the top 2 candidate, basically Macron and Le Pen, will get to compete again in the second round of election, which is on 7 May. So of course, this is one of the so-called best outcome of the election, whereby Le Pen and Macron both came in the top 2 and they move on to the second round. Okay, that's the reason we saw the euro gap upwards at the start of this week at the opening. So of course later we'll look at what happened to euro as of now. So these are the 2 big events last week. Next, we move on to this week's calendar. So for this week, there are 2 major announcements by 2 central banks. One is Bank of Japan and the other one is ECB. So this is on Thursday, 27 April. So for Bank of Japan, it is in the morning between 10 to 11 a.m. GMT plus 8 over here. So of course, Bank of Japan is expected to maintain their loose monetary policy, so as what their Governor Garuda has made in his speech last week. He says that they will maintain a loose monetary policy because they are still away from their inflation target. So in this week's monetary policy statement and the official press conference, we do not expect any so-called deviation from his speech 1 week ago. So chances is they will maintain a low interest rate and they will maintain their bond purchase program as well. Of course, in the event they feel that suddenly they want to ease further, example, they cut interest rate further for reasons they think they need it. So this is our suggestion. You can put a pending long dollar yen. If the actual interest rate is less than negative 0.1%. So this is a suggestion. Put a pending long dollar yen. Of course, the next announcement would be the ECB interest rate announcement, which is later the night at 7:45 p.m. GMT plus 8 time zone. So this is in concurrent. Both they are announcing their normal interest rate plus the deposit rate. So this is the suggestion pending short euro dollar in the event they cut either of the interest rate. Okay, this is our suggestion. Either they cut their interest rate by lower than 0% or they cut the deposit rate to less than negative 0.4%. Of course, if they really cut interest rate and the pending order is triggered, to take note that in another 45 minutes, the ECB will be making a statement and press conference, and depending on what Mario Draghi has to say, it could add some volatility to the euro-dollar pair. So manage your risk within that 45 minutes. If the market moves in your favor, remember to protect your position before the statement and the press conference. Next will be on Friday, end of the week. So UK is expected to announce their GDP. So this is our suggestion pending long pound dollar. Market is expecting 2.2% for the data. So our suggestion is a pending long pound dollar if the actual data is more than 2.2%. And then at night, 8:30 p.m., there will be the Canada GDP as well. So this would be our suggestion pending short dollar CAD if the actual data is greater than 0.2%. Market is expecting 0.1% for the GDP. So if the actual data is greater than 0.2%, that will fulfill our criteria for pending short dollar CAD. So very quickly, before we move on to the charts, this is our accelerator bonus offered by Fullerton Markets. So if you have yet to take advantage of it, do check us out at fullertonmarkets.com/promotions. The next announcement would be our upcoming event on this weekend on the 29th and 30th April in Bangkok. This is our first Fullerton Leaders Summit held in conjunction to celebrate our first anniversary. So I believe some of you will be joining us in Bangkok, and I look forward to seeing all of you there. And because of the event, there will not be any weekly research and webinar for Monday. So the weekly research and the webinar will resume on the 8th of May. So now we are moving on to the charts. Feel free to type in the currency pairs and the time frame you want me to look at. And before I handle your request, I will quickly do a review on all the charts that we looked at last week. The first one is basically Euro Sterling. Okay, the comment over here is aggressive entry short around 0.8485 after a price pause, or a conservative entry short after candle closes. Okay, this is my comment. So I'm going to zoom in the chart so that it is easier for you to see over here. Vertical line is the time of the webinar. As you can see, over here there's a pin bar. The spike up is just into the 0.8485 price, the decision area that I identified last week. And then the next candle that closed into the green box. So for price action trader, this is a typical so-called candlestick pattern where you see a doji and then followed by a bear candle. This is a typical bearish pattern to go short. So if you decided to take a short over here, and the first target that I mentioned is actually the blue area there. And the stop loss is where the red box area up above there. Of course, we know that in the middle of the week on Tuesday and Wednesday, that's where UK Prime Minister Theresa May announced the early election. So there was quite a fair bit of volatility, as you can see over here. This pair is a Euro Sterling, so Sterling actually rallied across the board against all the counterparty. So you have seen the Euro Sterling going all the way down. So the next chart that we have looked at is basically the gold. So gold is the vertical line over here is the time of the webinar. So this suggestion is to go short if the candle close into the green box, and the first target is actually the blue box over here. And the stop loss proposed by me is actually in the red box over here. So as you can see, the bear candle over here did close below the green box, but if you look at this trade from the entry price to the blue box, which is my first target, is very near. So but away from the stop loss is quite far. So this is like a risk reward, a quick estimation, a risk reward of 3.5:1, meaning if you lose 3.5. When you make a profit, you only make a profit of 1. So it is quite skewed towards the risk side. So it may not be such a favorable trade to take in this case. Of course, the other suggestion over here is for a long trade, provided if the price goes down to the blue box, the lower blue box area. Once it bounces up into the green box, that would be the entry to go long. As you can see, the price action did not fulfill this criteria at all for a long trade. The fourth chart that we looked at is actually euro dollar over here. So my comments is once price goes above 1.0670, this is 1.0670, look for bearish formation to go short. So of course the price went beyond 1.0670, but it went up further without giving us any bearish candlestick formation. So doesn't fulfill our criteria for a short for this suggestion. Finally, the last chart is pound yen. So pound yen over here, because of the long movement, it is skewing the scale of the chart by a fair bit. Okay, the first suggestion is actually to short if the stochastic turns back down below 80 over here. But as you can see, the price keep on going up and up, further up, and did not turn down at all. So the other suggestion for short is looking out for price action if the price turns down and close in the green box around 136.12. Thereabout, that could be the place to go short. That did not happen as well. And the last suggestion is actually to go long over here if the price close into the green box around 136.75 or beyond. So the price actually went close above, and it went up for about close to 45 pips or so before the volatility experienced by UK Prime Minister announcing the early election. So these were the 5 charts that we looked at last week. So I'll take on the suggestion for this week. The first, I see a question. Wayne, was there a time when you keep on losing in a month? The answer is yes. But when I say keep on losing, it doesn't mean it's like 30 straight losses in a row. Of course, that touch wood hasn't happened to me before yet. Hope that it doesn't happen to me. But I do have encountered a series of losses before. Some of you who have been to my event or heard me speak about money management, sometimes I showed my this losing streak trade record, which happened in 2012, which is about 5 years ago. I keep it as a reminder why I should follow money management. But to answer your question, yes, there was a time whereby regardless whether I go long, the market goes down. When I go short, the market goes up for whatever reason. But what protects me or protects my capital from suffering a huge drawdown is basically money management. So I control my risk. I follow my trading plan and my money management rules. So even I hit into a bad patch where I have close to 11 consecutive losses in a row, my account did not suffer a big drawdown. So let's look at the first request, which is dollar yen H4. Okay, this is a dollar yen H4 chart. There's a price gap up. Of course, the reason for all the price gap is because of the French election. The result is considered one of the best or the most optimistic result that could possibly happen. So that's the reason there's sort of optimism and risk-on kind of effect. So most of the so-called risk currencies will favor against the safe haven currencies. So in this case of dollar yen, even though both are considered safe havens, but Japanese yen is considered safer. So relatively, it makes the dollar a bit more on the optimistic side compared to the yen. So that's why you see the gap upwards even on a dollar yen chart. So having said all this, the next, of course, if there's optimism continue, not only from the UK election and also for the upcoming French election, it is possible to see the dollar yen continue to head upwards because of the weakness in yen. That's number one. Then, of course, number two, the continuous easing policy by Bank of Japan possibly will add on some of the pressure on the yen as well. And finally, for the dollar, dollar has recovered a bit of the so-called weakness lately, possibly due to profit taking. At this point in time, if you look at the possibility of a Fed rate hike in June is below 50%, and for the next rate hike to happen is most probably in September. So that is the expectation at this moment. So for dollar yen to go into a full reversal, heading back up to 115 at this moment, I personally will feel that it is quite unlikely. But like I say, as trader, we always react. So for dollar yen at this moment, if you see there's a price gap. I'm going to zoom in. So the start of the week has formed a consolidation. Okay, as you can see, the price gap up immediately. Price is falling back down and now is creeping up again. So let's look at this price range over here. What is the price? Okay, 110.45 thereabout. and it is a round number, interestingly, that is supporting it, which is 1110. So this is about a 45 pips consolidation for H4 chart. So of course, at this moment for this week, watch out for Thursday, Bank of Japan monetary announcement that will have an impact on this pair as well. But on a technical side, if it does close above 101.45 into the blue box, or rather the green box, possibly can consider to go long. Okay, the price is about 11058 plus minus, thereabout. Of course, if the price close below, possibly it is giving a sign of closing up the gap. Okay, if it close into the green box, which is around 109.88 plus minus or lower, that would be a signal to go short, our signal to go short. That's the dollar yen. Of course, from now until BOJ's announcement, possibly to apply range strategy to trade within the 45 pips consolidation that is marked by the blue box. Okay, that would be my suggestion for dollar yen. Okay, for this week at least. So the next request on my screen. Okay, before I move on, let me take this question. It says that I have advised traders that we should avoid to take trade in contra with trend. That means to take trade against the trend. If we trade in H1, H4 chart, will we follow the trend in the H1 or H4 chart or follow D1 trend? Please advise more. Okay. It is not whether I advise trader to trade against the trend. It is just my way of trading. I like to trade along with the trend because there are traders outside who like to take counter trend trades and they are still profitable. So I'm in no position to say that traders should not trade against the trend. It just means that you have to pick the trading style that suits you more. So for me, I prefer to trade along the trend. I'm not a very good counter trend trader. So that's why whenever I look at the chart, I tend to follow the trend, the direction of the trend. And then whether to look at H1, H4 or D1 trend, for simplicity, stick to one time frame. So if you are making a decision on H1, stick to H1. And if you are making a decision on H4, stick to H4. Because if you try to look at multiple time frame, sometimes you may confuse yourself if the cross time frame are showing different direction. It could be H1 showing uptrend but H4 showing downtrend. Then what should you do? So unless you have a trading plan to tell you exactly what you should do in that kind of situation, you most likely would end up confusing and don't know what to do. So my suggestion is you can start off with just deciding with one time frame first. So as you become more experienced, you fine-tune your trading plan, you may add on multi-time frame to help you decide. Or you could eventually end up taking only trades if 2 or 3 time frames are showing the same direction, meaning to say daily, 4-hourly and hourly chart are all showing the downtrend, then you will take a short trade. Or all 3 time frames are showing uptrend, then you will take a long trade, something like that. Okay, the next currency pair is pound dollar. Pound dollar, there's request to look at H1 and H4. Okay, as usual, I'll just decide on one time frame after I scan through both the time frame. So this is pound dollar. This is pound dollar H4. And this is pound dollar H1. Quite similar in a way where after the big move, market is consolidating. So whether I'm looking at the H1 and H4, chances is my support resistance would be a similar level. So I'll just look at H4 chart for my suggestion. Okay, after the big move, prices is finding support over here. $1.2770. So the price action tell us that investors are very optimistic about the outcome of 8 June election. They are expecting Theresa May to have a major win, able to secure a major majority. So this tells us if the actual so-called election result is not according to what the market expected, then the reverse is likely to happen, meaning pound dollar may start to trade downwards towards 1.25 or even lower again. So from now until 8 June, as long as there's any fresh poll result being announced, this is a tricky part for us trader, because we don't know when they will announce the poll result. It is not a scheduled data kind of thing. So as and when the fresh poll may be just announced by anyone, and such poll result is possible to create some volatility in the sterling. Example, if it shows that Theresa May is losing popularity against her opposition, then possibly we will see the pound dollar heading downwards. So for now, based on all the data and all the poll that we have seen, it is expected that Theresa May will be able to win a majority. So that's the reason we have written in our weekly market research that we expect the support 1.2770 to hold and possibly look to go long around 1.2770. So if you want a faster entry as compared to the H4 chart, then what you can do is you can switch to a H1 chart to look for an entry. Of course, the range is not very big. Okay, let me just mark the range. Okay, the upper resistance is around 1.2850. So once the price hit near to 1.2770, possibly you could look for a bullish pattern to go long. So this is my comment. Then of course you never know if some not so favorable news hit the wire that cause pound dollar to break 1.2770 into the green box. Then possibly that could be the start of a downward move for the sterling. So the other suggestion is if price close below 12770, somewhere around 12753 or lower, that will be our signal to go short. So this pound dollar, this is a H1 chart. So if you want a faster entry, then you go with a H1 chart. If you want a stronger confirmation, so-called, then you don't mind waiting for the H4 chart. But knowing the mentality of most traders, not all traders, most traders prefer early entry. They don't like to wait a 4-hour candle. So a good balance would be an hourly chart. Okay, the next request that I'm seeing on my screen is Kiwi Yen. Okay, interesting. Let's look at Kiwi Yen. Kiwi Yen H4. Good. This is Kiwi Yen H4. So as you can see, the Kiwi has been losing momentum against the yen, only to recover. And again, because of a risk-on kind of effect, and also weakness in yen over the weekend, you see the same similar gap happen across as well. So over here, let me just mark the area. Interestingly, the Kiwi Yen gap beyond the so-called resistance. Okay, let me change the color. Okay, over here it is finding support at around 77.40. I'm going to zoom in so it is easier to see. So for Kiwi Yen, suggestion is if the price can hit somewhere into the green box, candle close, okay. By now you should be familiar with how I trade. I don't put pending order in the green box. I usually will wait for a candle to close into the green box as a form of confirmation for me. Close into the green box or lower, regardless, then that's where I will go in for a short. Okay, the price of the green box is about 7725. Okay, plus minus 1 or 2 pips is fine. So once it closes below, that will be my signal to go short. And of course, the long entry would be a candle that close here. Actually, if it closes, let's say around 7, as long as it closes above 77.51, it fulfills my criteria to go long. Okay, so this is my so-called entry for Kiwi Yen. So now the prices is fighting, as you can see, after one bar where the body is very little, very small, with 2 shadow. Then the second bar is also fighting between the bull and the bear. So as long as it's fighting, we don't want to get into the fight. I will only wait for so-called clearer indication whether the bull or the bear is winning before I get in. So one way for me to tell is if the candle closes above 77.51, which is higher than the body of the bear candle, or it closed into the 77.25, which is almost lower than all the shadow, that would be a clue for me to go short. So this is Kiwi Yen for me. The next suggestion would be Go H4. Okay, the next request on my screen is actually Go H4. So this is basically Go. We are starting to see some early sign of a possible reversal in the go up trend after the risk-on effect and also the strength in the US dollar recently. The US dollar recovered some strength, interestingly, even though the data is not so promising and the rate hike expectation hasn't been increasing as well. But that's the situation at this moment. So if you look at the gold, it is quite a tricky situation, I would say. It hasn't, fundamentals wise, it hasn't really support a full reversal of the gold to go further down. So the only reason for gold to go all the way back to the March level. Okay, March level is all the way down here at about 1200 level. That will be a increase in rate hike expectation for June. So that's the only reason to see gold heading all the way down to 1200. So having said all this, if the dollar strength continues, then where to consider taking a short? This is the place that I would consider going short. After the price broke the support. So this is the current support at this moment. So if the price close below the support, which is around 1265, okay, close, oops, I'm trying to have some precision. Okay, a safer entry for me, it has to close at 1264 or lower. Then I will consider going short in this case. Okay, the other region to look out for is basically 1277. So for me, if the price close back above close back above 1277 around 1279. Okay, close at 1279 or higher, that would be my entry to go long. Okay, there's a question, if this candle close as a bear candle, is it considered as 3 black crow? Okay, theoretically, it is, as long as there's 3 bear candle, it is considered 3 black crow formation. Okay, example, as you can see over here, there's a lot of 3 bear candles kind of formation as well. Just for discussion purpose, you see here 3 bear candle, so it is considered 3 black crow formation. And over here, a bit of a controversy, there's 2 bear, and the third one is more like a doji. And over here is also a 3 bear candle. And then over here as well is a 3 bear candle kind of formation. So at this point, yes, it is considered a 3 bear. If it closes as a bear, it will be the third bear candle. It is a 3 black crow. So this would be the goal for me. Then of course, the other decision would be if the price, because if the bear candle is all the way up here, I want the price to go, the closing of the price to go nearer to 1267. Then I'll wait for the next candle. If it closes back above, that will be my so-called signal to go, possibly to go long over there. But usually this is a bit tricky because chances is by the time I have a bullish formation. The closing price is more or less in the middle between 1267 and 1277, and then my risk reward for this trade would be against me. So usually that is the case based on experience. But if it really occurs that the closing price is near to 1267 and thereafter it has a bullish candlestick formation, then I will take a long trade. Over here, I will also consider the risk reward factor as well. So ideally the entry price should be around 1269, thereabout. So let me just add some comments so that it is easier for review. So this is a blue candle. Oh no, I put a purple candle. Purple will correspond to the arrow as well. So this is what I would do, look for bullish formation to go long when for that entry over there. Okay, so this would be a goal for me. Yeah. Okay, the next request on my screen would be Euro Yen. Okay, Euro Yen. H4. Okay, let's look at Euro Yen H4. This is Euro Yen H1. This is Euro Yen H4. So as you can see, the formation is pretty similar to Kiwi Yen. Okay, if I just put the chart side by side. Okay, I'm switching between Kiwi Yen. Okay, this is Kiwi Yen. And this is Euro Yen. Okay, of course the magnitude is different, meaning the gap is different. The downtrend movement is more, that kind of thing is different, but the general movement after a trend, downtrend, it is gapping upwards. It is sort of a similar kind of formation. So my trading idea for Euro Yen will also be similar to Kiwi Yen as well. So as you can see, Kiwi Yen over here, I've given a suggestion where to go, possibly consider to go long, and where possibly consider to go short. So similar for Euro Yen. Euro Yen, the only difference in terms of fundamentals for Euro Yen is the election, the French election. It is scheduled to be held 2 weeks later, actually pretty fast. So from now until the actual election on 7 May, of course, as usual, there will be a poll, so-called poll results being released, that kind of thing. So between the two candidates, Macron and also Le Pen, what makes the election important is because both represents different, or rather both will have a different effect on the euro. So if Macron, who is known to be a globalist, to win, then possibly it is considered to view as favor for euro. But of course, Le Pen, who is anti-EU, if she wins, then market will speculate possibly we could see Brexit coming up. And then if the second largest economy leaves EU, that will spell trouble for the euro. So depending on who wins, that will decide the fate of euro in upcoming months. So that's why when two results will present with different so-called impact on the currency, that's where the importance come about. Because if two candidates are pro so-called EU, and if either of the candidate win, it's also good for euro. There's not much uncertainty to look at. So meaning to say from now until 7 May, we do expect uncertainty to hover around the euro, and when there's uncertainty, there's a good chance that the market will sell first, then think later. So having said that, that means there's a possibility that for euro yen to close up the gap this week. So as trader, we do not predict the future. What we will do is we react. So how to go about reacting? As you can see over here, the price, the kind of price action sort of tell us some story. The shadow of the candle is like the legs of mosquitoes, very long. When there's long shadow, it means the bull and the bear is having a tough fight. And both are considered quite of competitive. In terms of strength, there's no clear-cut winner between the bull and the bear. In terms of strength, that's why the body of the candle is quite small. So for the signal to go short, okay, most important now is if I have to take into, usually I don't take into consideration of all the shadows, but if there are a few shadows that is as long and side by side each other, then it is a clue for me to take into consideration those shadows as well. Okay, interestingly, it is also sort of supported by the round number of 119. Okay, just to mark the round number, this is where the round number is, 119. But that is almost at the tip of this shadow. So I will shift it higher, somewhere like an average of all the three shadows over here, which is also at the interesting sort of round number, the 20 round number. Okay, for trading, you may heard of round numbers like the zero. The big round numbers are the zeros, and then you have the 20, 50, and the 80 round numbers. So in any case, this is 11920. So if the candle closes below, where closes below, so into the green box, so it could be 119.18, 17, that kind of thing, that will fulfill my criteria to go short, expecting price to close up the gap to where the pre-election level was. So for this case, it would be if you look at the pre-election level, it is about 200 pips away. Okay, so quite a significant drop. I'm not saying the price will move 200 pips, but there's a possibility it could drop that much. So this short, and if you ask me where would be the the stop loss will decide at the point of entry how's the price action look like. So at this point, I don't have the price action to help me decide where is my stop loss. So chances is could be somewhere here, depending on the prior candle before the candle that closes below 119.20. So the candle before the candle that closes below 119.20 depends on where is the high of the candle. So that will be a reference for me to set my stop loss. Then some of you may ask me, oh, so Wayne, what would be the long, where would I go long on Euro Yen? Fundamentally, I don't feel comfortable going long now. So I may be wrong. Euro Yen may just shot up in the next 1 week before 7 May because of so-called poll that says Macron is high chance that Macron is going to win. But until that point in time, then I'll decide whether I'll go along if there's really such a news. But at this moment, based on whatever I have or whatever is happening now, I don't feel comfortable going long regardless of the price, because even if the price goes close above, it may be a fake break and turn downwards. So that's my stand on Euro Yen for now. Okay, so that's the final request on my screen. Perfect. So we have quickly coming to the end of the webinar again for this week. So hopefully this webinar has given you useful information to set you up nicely for the week. So I look forward to seeing you in our next webinar 2 weeks later, same time, same channel. So this is Wayne signing off on behalf of Fullerton Markets. I wish everyone a good night, and may the pips be with all of you. Good night and bye-bye.